Well, Asian markets, they trade lower amid the ongoing geopolitical concerns. Also closely watched is the meeting between US President Donald Trump and North Korean leader Kim Jong-un, who are set, to enter the second day of nuclear talks in Vietnam in a few minutes from now. Now, in terms of data coming in from China, the February official manufacturing PMI, that came in at around 49.2. That compares with a reading of around 49.5. And also the non-manufacturing PMI came in at around 54.3. That compares with around 54.7. But Asian markets for starters, they're trading in the red. Nikkei is down close to 0.5%. The Kospi as well was down 0.2%. And both the other couple of markets, that's the Straits and the Taiwanese index, have opened up with a bit of a negative bias. The SGX Nifty, that's indicating maybe a 15 to 20 point downtick just to kickstart trade. But the real action today will be in the second half of the trade, and particularly in the final hour of trade, because today is expiry day as well.
Federal Reserve Chairman Jerome Powell, in the second day of his congressional testimony, said the central bank is close to an agreement on the balance sheet plan. He also described the U.S. economic outlook as favorable, but noted headwinds from global markets. CNBC's Steve Lisman reports.
Well, Fed Chairman Jerome Powell going further than he has in the past about plans by the Fed to end the runoff of its balance sheet. He now confirms the Fed is working on a plan to end the runoff later this year.
We've now had 3 consecutive meetings on the balance sheet, and we've worked out, I think, the framework of a plan that we hope to be able to announce soon that will light the way all the way to the end of balance sheet normalization, and that will result in the end of asset runoff sometime later this year.
As you heard in some sound at the top of this show, that they haven't quite figured out what the right equilibrium level is. The Fed is not also raising its inflation target, rather than changing its inflation communication of its goal. The Fed does not want to lower capital standards for big banks, Powell told the House Financial Services Committee as well there. And in addition, Powell stuck to his mantra of the Fed being patient on policy and that the U.S. economy is in good shape, but faces risks from abroad and some domestic issues as well. Now, many Fed watchers say that plan to unwind the balance sheet could be agreed to and made public as soon as the March meeting. That plan could show the Fed will be comfortable with a balance sheet of around 3.6 or 3.7 trillion. So just $250 or $300 billion of assets to run off, guys.
Well, let's also hear out what experts have to say on the Fed chair's testimony and the rate trajectory going forward.
Chair Powell, I thought he gave a very smooth, confident performance. He knew what he wanted to say and what he didn't want to say. You feel like he's really taking control now, and I think that's a good thing. I think it gives a more predictable Fed, and I like very much that he sort of recognized that they might be at the neutral rate now. And so that's kind of reining in the people who say, well, unemployment's low, the economy's growing, we have to keep raising interest rates. And he's done the same on the balance sheet. I think that's less important. But again, I think it makes the Fed more predictable and easier to understand.
The Fed obviously has pivoted. Now even the balance sheet looks like it's going to go away. You know, they're going to keep a pretty hefty chunk of reserves in the system. So maybe the balance sheet runoff ends at the end of this year. Now there's even talk about this new sort of price level targeting or some variation of that, where they're going to allow inflation to overshoot above 2% for as long as needed to compensate for the persistent undershoot that we've seen. So all of it is a more dovish tilt, not only kind of for the cycle, but even beyond that.
Well, on to another testimony in the United States. U.S. Trade Representative Robert Lighthizer also testified in front of the House Ways and Means Committee. His testimony comes as China and the U.S. try to strike a deal to avoid a full-blown trade war. CNBC's Skylar Toshe has more details.
President Trump's top trade official took more than 3 hours of friendly fire from the House Ways and Means Committee, where he received largely bipartisan praise for being willing to take on China directly. And in that testimony revealed just a few details about a hypothetical deal with China. He said it would include agricultural purchases for several years, that it would end certain Chinese state subsidies to sectors that have oversupply of things like washing machines and solar panels, that there would be a mechanism to prevent currency manipulation downward, though Ambassador Lighthizer said he actually believes China is doing the opposite. And there would be a regular enforcement dialogue at all levels of government that would happen multiple times a year. But despite progress in these areas, Ambassador Lighthizer said there is still much work to be done.
I'm not foolish enough to think that there's going to be one negotiation that's going to change all of the practices of China or our relationship with them. I don't believe that. And I believe other problems will arise, and they're going to have to be dealt with. I view this as a process, but this is I use the term turning the corner. This is the first time, I believe, that it's been approached in this way. And it's really the result of the creation of an enormous amount of leverage by the president.
And amid reports of increasing tensions between President Trump and his top trade official, Ambassador Lighthizer repeatedly credited the president with empowering and inspiring his trade agenda.
All right, let's take a look at the U.S. markets, where the stocks bounced off intraday lows but still closed mostly lower as investors focused on congressional testimonies from U.S. Trade Representatives Robert Lighthizer on U.S.-China trade negotiations and Federal Reserve Chair Powell's Day 2 congressional hearing. The Dow and S&P 500 fell for second day on a row, while the Nasdaq egged out minor gains.
Okay, turning our attention to the European markets, then they closed lower. Investors out there, they're focusing on the meeting between US President Donald Trump and North Korean leader Kim Jong-un. Now, the other big focal point is Brexit. That continues to be the key focus in the region. Now, in the latest, British Prime Minister Theresa May has offered lawmakers to vote on a no-deal Brexit or to postpone the UK's impending departure from the European Union if a proposal isn't accepted.
Well, let's move on to the currency space. The dollar holds on to overnight gains supported by higher bond yields. Meanwhile, safe haven yen weakens versus the greenback.
And in the world of commodities, and crude oil prices rise, adding to gains made in the previous session. Now, this after US inventories unexpectedly plummeted and Saudi Arabia brushed aside comments from US President Donald Trump seeking to keep oil prices under check. Remember, just a couple of trading sessions ago, the Brent crude prices had fallen to around $64.50 per barrel. Now they're almost back at those levels of around $66.50 per barrel.
OPEC has been doing a great service, not only to producers. You can ask the producers in the shale basins in the United States whether they had benefited from the actions that we have taken over the years, in particular during this longest cycle, where we saw prices crashed by over 80% at one point, where we saw the supply-demand balance went into disequilibrium that had never been witnessed, where we saw companies in the United States, more than 100, file for bankruptcy, with all the negative consequences on the industry, on the regions where they operate. The United States today, as I said, is the biggest producer in the world. And we are proud of the achievements, leveraging on the most sophisticated financial system in the world, if you like, continuing to attract capital from both public and private equity, and meeting this growing demand. Without the shale revolution that we have seen in the US, the world would have been in major energy chaos. What is needed now is for us to continue this relationship with the non-OPEC in order to sustain the relative and fragile market stability that we have been able to achieve.
Well, back home on the Wall Street, the market gave up gains amid the rising tensions at the LOC. The Sensex dipped close to around 500 points from the high point of the day, while the Nifty as well did see a sharp downtick from the day's top. The mid-cap index ended with minor gains, while the Nifty Bank underperformed after HDFC contributed over 50% of the losses in yesterday's trading session. Ekta is with us to run us through all the market cues we need to track today. Hi, Ekta, good morning.
Well, morning, Nigel. Well, like you mentioned, yesterday it was a volatile trade as the India-Pak tensions really weighed on sentiment. So we had the India VIX, which spiked up around 12% So that was a key indicator in terms of the kind of volatility that we saw yesterday. So the Nifty eventually ended in the red after what was a choppy session. We had the mid-cap index, which ended in the green, but it was off the day's high significantly. Let's also pull up how exactly the rupee and the bond markets closed as well. So we had the rupee markets, which closed at around 71.2, and we had the bond yields, which spiked up to around 7.48% yesterday. Now, in terms of the flow picture, however, the FIIs continued to put in money, so that was probably a little bit of a reassurance. So we had the FIIs net by around 423 odd crores and the DIIs net by 67 odd crores. For today, it is likely that maybe volatility would probably continue to be the name of the game, as the India-Pak geopolitical tensions could probably continue to weigh on sentiment. There is also a lot of other factors market-related today. So we have the Feb expiry today, the Bank Nifty options expiry, Nifty options expiry, and eventually we have the Q3 FY19 GDP, which will be released later on in the evening. So we will only be reacting to that tomorrow. In terms of levels to watch, the intraday high of yesterday would probably be a good level of resistance, which would probably be in the near term. So 10,939, the recent low of 10,729, which we hit earlier in the week. So that would be something to watch in terms of the downside. And overall for the US markets, not much movement there. We have the Trump-Kim meet in Vietnam to track. So that would be important. Brent, which is still between that range of $65 to $66 per barrel. And let's see what the XGX is currently indicating at this point in time. So just about a flattish sort of start is what it's indicating. In terms of how we've done versus the globe, MSCI India week to date is up around 0.2%. Compare this to MSCI Asia ex Japan, which is up around 0.3%. So largely in line in terms of the performance.
Absolutely, Ekta. A lot of macro factors are what we'll be watching out for, but a lot of stocks will also be in focus today.
Well, yes, the NPPA has capped trade margins for 43 oncology drugs at 38%. My conversations with a lot of industry people has indicated that it is probably going to impact a lot of hospitals more as opposed to just pharmaceutical companies. So the likes of maybe HCG, which has a strong oncology focus, even the likes of the domestic companies such as Cipla, Alchem, Sun, Dr. Reddy's, Cadila, Eris Life Sciences, all of them have strong US-India portfolios. ARSS Infra, one of the company's JVs, has been awarded a work order of 429 crores. Megmani Organics, NCLT approved a scheme of arrangement. Wipro is to acquire Workday and Cornerstone on demand business from Wipro for a cash consideration of $110 million. Quick Heal, there's a board meet on March 5th to consider a buyback. KSB Limited came out with numbers, so watch out for that one. Allahabad Bank, capital infusion of 6,896 crores from the government. Vascon Engineering, work order of around 83.5 crores. Jet, they've given an update in terms of the grounding of the aircraft. Companies actively engage with all aircraft lessors and regularly is providing them with updates. Tata Metallics, the board has considered and approved a capacity expansion outlay of 555 crores and also an issuance of equity and convertible warrants to its promoter Tata Steel on a preferential basis.
Okay, all right, Ekta. Thanks so much for that.
Well, almost 24 hours after the Indian Air Force carried out a non-military preemptive strike on Jaish-e-Mohammed terror camp in Pakistan's Balakot, Pakistan yesterday responded by targeting military installations on the Indian side. Remember, Pakistan had claimed that it had targeted non-military locations in India. However, that claim has been denied by the Indian government. Also, the Indian Air Force shot down one of the Pakistan's fighter aircraft. However, the Ministry of External Affairs has said that India lost one MiG-21 Bison in that engagement.
And Pakistan Army has one pilot, Wing Commander Abhinandan, under its custody. Now, in a tweet, Pakistan Army has said, and I quote, Wing Commander Abhinandan is being treated as per norms of military ethics. Now, in a démarche issued to the Acting High Commissioner of Pakistan, the Ministry of External Affairs said it expects his immediate and safe return. The government also strongly objected to Pakistan's vulgar display of the injured pilot in violation of all norms of international humanitarian law and the Geneva Convention. Let's hear out what Ministry of External Affairs spokesperson Ravesh Kumar on the engagement between the Indian and the Pakistani Air Forces.
The Pakistan Air Force was detected and the Indian Air Force responded instantly. In that aerial engagement, one Pakistan Air Force fighter aircraft was shot down by a MiG-21 Bison of the Indian Air Force. The Pakistani aircraft was seen by ground forces falling from the sky on the Pakistan side.
So what should India do now? Should they escalate the issue further in order to keep the pressure on Pakistan intact, or should we refrain from reacting further at this point of time? Now, we pose these questions to former diplomats and defense veterans. Let's listen in to what they had to tell us.
Pakistan should learn a lesson that they're extremely vulnerable, and therefore if they try these games again, their Air Force can be very badly hit. Now, whether matters will stop here or whether the Pakistan would wish to escalate it further, my own feeling is that India at this point in time need not react further, because we have actually taught them a lesson. Now Pakistan will use our pilot as a bargaining counter, what kind of bargain they would want to make. The dialogue that Imran Khan is suggesting is utter nonsense, because the issue is not dialogue. The issue is Pakistan's credible, verifiable action against terrorists, and that's the reason why we went in and attacked Balakot. Therefore, if they want a dialogue with India, they cannot use the pilot as a bargaining counter. They have to show that they are going to act credibly on the issue of terrorism. And then, yes, we've always said that we can, our doors for a dialogue are open, provided Pakistan deals with this problem of terrorism.
Dialogue is possible in an atmosphere free of terrorism, which is our position. So you please give us proof first that you have taken care of all the terrorist organizations and you have rooted out terrorism from your soil and eliminated all the training grounds, etc., which is of course run with the connivance and help and full support of the army. I believe even the trainers in Balakot could have been ex-army, personnel, etc., which is the normal thing that happens in these training grounds for the terrorist organizations. So I think Imran Khan is sort of wasting his breath without actually getting the support of the army. That let him first say that we are serious, we will root out all the terrorism. Let him begin by saying that first, and then providing some tangible proof, because we have seen this for decades now. We have seen this for decades, and I don't think anybody is going to take Imran Khan for his word.
We have to be implementing the military measures in place, concurrently carrying out diplomatic effort. See what happens. Earlier we lost time and ended up with the world community coming up against us. That is what exactly is happening. Now, yesterday after our strike, there was no one who blamed us for anything. But today we have comments coming in from Russia, from China, asking both of us, India as well as Pakistan, to de-escalate. So this is what is the problem. This has always been the root cause of the problem. If we have the will, if we have the potential, we have to address the root cause of the problem. It has to be a comprehensive, continuous effort in one singular dimension, leading to the conclusive end of what ails us.
I'm recommending restraint. It's easy to talk about escalation, but you go in for any operation with clear objectives. What were our objectives? Our objective was to send a message and destroy a camp. Now, having achieved that objective, you can escalate or you can wait for reaction. If you wait for reaction, and if you're stronger, you can afford to wait for reaction. If you're weak, you should not. We have the capability to absorb such setbacks. We do not have any clear objective. If we had any more in terms of terrorist camps, some more, I think the action would have been taken against that. It is based on actionable intelligence. It's actionable intelligence which should be available. So we just cannot go for a war.
The Pakistani action today was provocative and escalatory. We had not struck any any target of the state of Pakistan, military or civil. We had struck a terrorist facility, and it was a preemptive strike. Imran Khan has been put forward by the military to really show the world that they are a reasonable people, that they are being very cautious and careful. There's a wide difference between their actions and Imran Khan's words. So now their object is to draw in international opinion, the intervention of the great powers.
Does anybody expect that Pakistan and its Prime Minister will indeed walk the talk towards peace? We would be naive to even imagine that. Possibly an engagement took place, and when that engagement took place, one F-16 was downed, and unfortunately one of our MiG-21s is missing. This is the result of a particular engagement. There is nothing wrong in it. Is it provocation? I'm not sure. What else could Imran Khan and Pakistan have done to show that they also mean a little bit of business? They couldn't have just taken yesterday's activity lying down. They had to take action. And they have taken this, which I think to large measure is a limited action. Will it stop here? Will it escalate? We will have to wait and watch. We have to be conscious that it could escalate. And we have to be careful with our defenses and our plans to take action as and when there is a chance of its escalation.
Well, all eyes on the GDP data due later today. A CNBC TV18 poll estimates growth to slow to around 6.8%. That compares with around 7%. Lata is with us early this morning to run us through the key expectations. Hi, Lata. Good morning.
Well, it's widely expected that the GDP number will slow down to 6.8 and the GVA number will slow down to 6.6. This compares with the second quarter number of 6.9. Now, one part of the slowdown also is because the base picked up. In 2017, the mid-quarters were all affected by GST, and growth had picked up by the third quarter of FY18. So the base itself is one reason why you should expect the number to be a little lower. The base had risen to 7%. If you remember, in the first half, the base was 5.6 and I think about 6.5. The third quarter of FY18 had seen a fairly decent pickup. But within that, the big cut will come in manufacturing. Now, we don't have very detailed numbers in that. Agriculture is expected to do 3.5% compared to 3.8% in the previous quarter, the year-ago quarter. Manufacturing is the one that's expected to be flat. Now, some people also expect that it would be lower. This is because largely the debt problem, the debt market issues, starting with IL&FS, continuing with DHFL and resulting in a very tight monetary situation. If you remember, October was also $86 crude prices. So all that has affected, if you remember, contracting car sales in November and December. So we should have lower than expected manufacturing. We got a poll flat manufacturing number, but I wouldn't be surprised if it was actually lower because the debt problem could have hit rather badly and services in the same rung will be affected. So just be prepared for a 6.6 GVA number, which would be lower, the lowest in this quarter. The first quarter was 8%. But that was because the year-ago quarter, again, was very bad because of post-demonetization and the first impact of GST. All told, the GDP number has lost its reverence, especially after the backcasting of the numbers through all, the entire series into pell-mell. It's lost its reverence. It's important only because fiscal deficit is counted as a percentage of GDP. Current account deficit is counted as a percentage of GDP. So the broad nominal GDP number is about the only relevant number. This will come and go. It's a lagged number.
All right, Lada, thanks a lot for joining us and giving us all those details. We'll be watching out for that number in the evening today. Well, we are getting a PTI report which says that the White House has urged India and Pakistan to take steps to de-escalate the tensions on the border. So that is something that we'll be watching out for. It's an important development. Also, UK, US and France, they have asked the 15-member United Nations Security Council Sanctions Committee to subject Maulana Masood Azhar, the head of Pakistan-based militant group, to an arms embargo, global travel ban and asset freeze. So this is also an important news that is flashing for you. It will be flashing for you on the screen. So these are certain important developments that we will be tracking going forward as well. But for now, let's move on. Global retail giant 7-Eleven may be a step closer to setting shop in India. Sources say the board of Future Retail will be meeting today to discuss a tie-up between Future Retail and 7-Eleven. CNBC TV 18's Priya Sheth has the exclusive. So Priya, take us through the contours of the deal.
Well, sources tell us that the board of Future Retail will be meeting today to consider the tie-up with international convenience store chain 7-Eleven. This means that Future Group will be able to bring 7-Eleven to India if the deal goes through, and it will be through the master franchise route. That is what sources are telling us. But of course, as far as the details of the contours of this deal are concerned, we understand that the deal is likely to be a revenue sharing model where there will also be some amount of technology transfer that will happen as a part of this overall deal. But it's a long-term franchise agreement that we're looking at. About 70 to 80 years is the kind of time frame is what we do pick up. But of course, this deal is in line with Future Group's small store strategy, because do remember that Future Retail has about 1,300 small stores under it, and it has an ambitious rollout plan of bringing about 10,000 stores very soon. But of course, as far as the specifics or the details of this deal are concerned, the parties are working upon the kind of rollout that will happen on a pan-India basis, but it should take about 6 to 12 months for the rollout to begin as far as 7-Eleven stores are concerned. In fact, we'll have to wait and watch how this plays out. We're not sure whether there will be a concrete decision at the end of the board meet, but this definitely is an issue that the board will be taking up today.
All right, thanks so much for that. Well, moving on then, Bharti Airtel will be on our watch list on the back of its board meet that's scheduled later today. Rima is with us to run us through all those details and what's on the agenda. Hey Rima, morning.
Hi Nigel, good morning. Yes, the Bharti board meeting is today, where they will take on board the recommendations of the Special Committee of Directors on fundraising. So it could be why the QIP routes, the rights issue or the preferential issue, though the buzz in the market is that it could be a rights issue, and with the promoters holding about 67% stake, they will be putting in 2/3 of the money. The question is, how much of fundraising do they do? The debt on the books is close to 1 lakh crore rupees, and Moody's had recently downgraded the group's rating to a junk status. So that also additionally puts pressure on the group to bring down their debt. Of course, equity fundraise is not the only route the company is taking to bring down their debt. The Africa debt will already come down by $200 million post the investment by the Qatar Investment Authority. Plus, there is the Africa business IPO. They're looking, they perhaps will monetize the Infratel stake as well once the merger with Bharti Infratel and Indus gets completed. So there are a lot of measures, but today the key will be how much do they raise and by what, and what will it, what dilution will it entail?
All right, Rima, but stay on. Wipro will also be in news today as it is divesting its Workday and Conversation on-demand business to Allite. What are the details?
Yes, so this is actually a system integration HR business that the company will be divesting. Workday and Cornerstone on demand. The transaction is done for a total cash consideration of $110 million, of which $100 million will be paid at the close of transaction and $10 million will be paid after 12 months based on the performance targets achieved. The transaction is expected to close in Q4 of FY19. Remember, the company had acquired this particular business as a part of the Aperio buyout in 2016. So what the company has done is that they're holding on to the cloud offerings of Aperio like Salesforce and AWS, that's Amazon Web Services, while they will be divesting this HR business, which largely caters to the mid-market client, where it appears that the company is facing some issues to scale up the business or penetrate the larger clients. So that is the reason why the company appears to be divesting. Axis Capital says the divestment will account for 0.6% of the company's revenues in FY20. CLSA says that there should be a short-term boost, so the company will have a $20 million gain from the sale in FY19 and possibly $10 million in FY21, but it does suggest that the company had some issues scaling up this particular business organically, which is why they're looking to divest it to Allied. And it also helps sharpen the focus on other businesses. So net-net, it's strategically, it seems to be making sense for Wipro.
Okay, all right, Rima, thanks so much for that. Let's focus on the commodity space. Manisha Gupta joins us to run us through all the cues coming in from there. Hey, Manisha, morning.
Hi, morning. Well, yes, the surge is back in case of crude oil prices, 2.5% up overnight. And this is after we've seen more than 8 million barrels of a decline in U.S. weekly inventories. The API data suggested 4.5, but we've almost gone double of that, and that has been supportive. Also, when you look at the U.S. imports, that are the lowest in a decade, and that tells you that the OPEC countries' exports to U.S. have been declining. But what really has been a bearish number is the U.S. production, which is at a record highs of 12.1 million barrels per day now. This has been increasing on a week-on-week basis, and that is what is keeping the crude oil prices in check. Having said that, all the losses that we started this week with have now been erased, and we are back in case of positive for this week as well. What also is gaining strength has been the metal prices. The U.S. dollar is very close to its 3-week lows yet again. The markets will watch out for the U.S. Fed's second straight day of testimony. The U.S. and China trade talks seem to be progressing good. And then you have a deficit in many of these metals. So copper inventories on LME are at a decade low. Zinc inventories on LME are at the lowest since 2007. So a few of these metals have bullish fundamentals, and the macro picture seems to be supportive as well.
Okay, all right, Manisha, thanks so much for that. Well, Sona, I just want to make a quick point on iron ore. Internationally, prices have gone up by nearly around 30% because there was a disruption at Vale. Now, domestically, I tried to check with miners overnight, and they have said that prices have started coming off a tad bit, both on iron ore as well as on pellet prices. So we need to focus on that because in the last month or so, we have seen both pellet and iron ore prices going up. Just thought I'll mention that.
All right, point noted then. But today it's expiry day and we will be talking about future and options space. So Manglam joins it with all the cues that we'll be watching out for from the derivative space. Hi Manglam, good morning.
Good morning, absolutely. So it is the Feb series expiry, and what a series it has been. We were bracing for a lot of events in the Feb series, be it the result season, be it the budget and other global developments. But then towards the end of the series, we had this border skirmish which added to the volatility in the market. So we started the series with 10,831 on the Nifty. At the high, we hit 11,118. At the lows, it was 10,585. And we are almost back to where we were at the start of the series at 10,807. The last couple of trading sessions have been marred by the skirmishes at the border, and that has increased the volatility. So if you take a look at what took place on Feb 26th, the volatile moves, the Nifty moved at in a range of 10,729 to 10,889. Yesterday too was a range-bound move, but yesterday the range moved a little higher. So the low yesterday was higher than the previous low, 10,751 to 10,940. So that those are a couple of data points in the last two trading sessions, but higher than where the Nifty is right now. We have all the moving averages kicking in, the 20-day moving average, the 50-day moving average, and the 200-day moving average. Remember, the last couple of trading sessions, the Nifty crossed the 200-day moving average, but could not sustain on that on a closing basis. In terms of the index futures, we saw some purchase, but remember, because the VIX is high, the street will be playing for a range. Maybe a lot of options will be written at the 10,800 mark for a premium of 100 rupees. So 10,700 to 10,900 could be the range.
Okay, all right. Thanks so much for that, Manglam. Well, on that note, we'll wrap up on Power Breakfast. We'll leave you, in fact, with the picks of our bullseye contestants.
I have a sell on Reliance Infra Futures. Stop loss 131.20 and target 122.50. Next one is a sell call on DLF Futures. Stop loss 168 and target 157.50. The third one is also on the short side, and that is Bajaj Finance Futures. Stop loss 26.98 and target 25.30. The last one is also on the short side, and that is Equitas Futures, with stop loss placed at 114.50, whereas target on the downside has been kept at 107.
Hi, first call is buy call on Sun TV, target 655, stop loss 570. Second buy would be on NRB Bearings, target 216, stop loss 188. Third buy would be on McDowell for target of 568, stop loss 521. And final call would be a buy call on Allahabad Bank for target of 51, stop loss 44.9.
The first sell recommendation is on Ujjivan.
One can sell Ujjivan for a target of 265.50 with a stop loss of 281.05. The second sell recommendation is on Hindustan Zinc. One can sell Hindustan Zinc for a target of 257.20 with a stop loss of 267.10. But the third recommendation is a buy recommendation, and that's on McDowell, that is United Spirits. One can buy McDowell for a target of 563.90 with a stop loss of 521.95. And a final recommendation is again a buy recommendation, which is on Godrej Industries. One can buy Godrej Industries for a target of 511 with a stop loss of 485.95.